So I'm going to break down gold for you on the daily time frame. But if you watched our last video on YouTube, which is gold's journey to all-time highs explained, you realize that during the week on the Throne Telegram group, we had trades on gold. This was a new high has been formed on gold for a buy entry because in this video here we had explained that if gold breaks the resistance which was above it and forms a higher high, then we could have another buying opportunity. And when that happens, we had this second entry. Remember the first entry at 49.77, we explained it already. So we had more entries at 5,176. However, the market came back and took us out, which we shall break down and explain in this video here. But the other entry, which I want to explain to you, is this one. And this is the tweet, still on Throne Trades. So the most important thing is if you want watch an analysis of a video on YouTube, and then you can follow up in the group. That is where I give like the next signals and the updates. So this was on 25th of February. So it was like gold above 5,075 is a buy. So we wanted to look for buying opportunities when gold reaches 5,075. And then from there, that is actually why we had this. So now, the first position were taken out, the second entry were taken out, and then we had more at around that 5,175, which is this second entry that we have here. We are still holding on the first entry, and we're expecting it to go to all-time highs. Now, there are very many reasons why gold could go to all-time highs. Fundamentally, but before we go into the fundamentals and look at the technicals, just on the daily, I'm not going to go to the weekly because I'm seeing a good structure on the daily. So on the daily, let's first mark these as our all-time highs. This is where we would expect gold to go to 5,600. And then we had clearly established that gold broke above this area here. Okay, so this is what we had last week before this break. Now, this week here, we want to just trade around this region here. But let's first break down how we traded last week around this region here. But before we go into that, what I want you to observe is that right now the market has created a new higher high within this. So that means this becomes our low, and then this becomes our new higher high. And we want to find out the difference between this new higher high and this new lower and these new lows, which would be here at this point where the market broke above. So right now, we know that we are trading above this and we are bullish because the market has continued to break this high and then this high. So once you have this clearly stated, you can also look for visible highs on the daily. You can clearly see here, this is a high. In other words, when the market reaches here, there will be a reaction. So once you have this, now let's switch to a 4-hourly time frame. And then I explain actually why the second entry, remember our first entry was around here, which we have already explained thoroughly in this video on Throne YouTube. We come to this video, which was done 8 days ago. So now, then in that video, I had explained that if gold breaks above this area here and then begins to break a high, then we can still be bullish. And that is what gold did here. Gold comes here, forms this high, pulls down, and then breaks this to form a new higher high. So the moment we had that, this was always an area where we would be looking for for buying opportunity to add more positions. So now we had this, and our stop loss was just below here. But what I want to for this second entry, for this trade entry, this one on 25th. So just below 5,118 we were taken out. So with that being said, I just want to explain to you why we had these buys above here and then why we were taken out and why we had another entry just right here, which I tweeted. So the most important thing for you to understand is that if the market has already left and formed a higher high and then pulls back into this, there is a possibility that it will just go back to form a new higher high. However, for this case here, the market came down into this previous price difference here, forms a support, because you can see this low here, forms a support within this previous break. And that means now the market is failing to break further down from here. And then from here comes to break up. So whenever price was around here, although it ranged this one for several days, but as long as price could not return to this, form this lower low here, we are interested in buying. And this is why we got the second buy around here and we were just in drawdown. Now, with that being said, let's come into this week now. Now, this week, technically, we can already tell that we formed a higher high, meaning now this becomes your new low, this is your low, and then this is your new high, and this is your price difference. The difference between this low and this new high is here. So as long as price does not come to break below this, to come down, to break below here, we are bullish. So how are we going to trade this? I want you to observe these areas here. You look at on the left here, you see these are areas where market would actually react. So we can just mark them like that because this is like a supply area. Now, I've explained the concept of supply in other videos, but let me just break it down for you. When you see a series of one-sided candle, and then you have an opposite candle, that is actually where your supply is, and the market is going to react there. In this case, we have a series of bearish candle, bearish, 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 and then we have this bullish candle, the only bullish candle in a series of bearish candle, and this is your supply. When the market reaches here, there will be a reaction. Okay, so these are the areas we shall be expecting gold to react, this and this, as it goes on to its all-time highs. So for us to have an entry, if you want to look for entries, the most important thing you need to notice is that if there is a pullback into this area here, and then market fails to come and break this, and then break back inside, that is where you can have your second, your another entry. So for those of us who are holding the buys from here, and then from here, we would be adding more buys if the market does not come to break this. So you want the market to pull back into this area, fails to break this, and then closes bar above this line here, we can have an entry. So in case this does not happen, that means the next entry we shall see when the market breaks here, or else when it also breaks here. So we'll be looking for buy entries, but now this is what we're seeing technically. But what I want you to observe is fundamentally we've already been having the Iranian US-Israel conflict, which has already happened and happened already on Saturday. And that is going to really be manifested in the market the following day. So if that is manifested in the market the following day, that means we're going to have a lot of bullish movement within the Asian session. So what I want you to notice is that gold is actually a very good pair to trade, because when you trade gold, you realize that gold has the capacity to move on both Asian, London, and New York session. So if you wake up tomorrow and then you just see a big bullish candle to the upside, it is because of the geopolitical events that are happening. And let's see how they happen on the weekend, but the market is going to absorb and react the following day. So that is what we want to see on gold. So let's just see how we can continue to look for buying opportunities as long as the trend has not yet changed.